This is Tom Aspray with the Viper Report. Since the bear market ended in 2009 and the new bull market started, many of my contributions to Forbes.com have featured what's known as the RS, or the relative performance analysis. Simply put, this is a ratio of a stock or an ETF typically to the S&P 500. So if this plot is rising, it means it's acting stronger than the S&P 500, or if it's declining, it indicates that that market is weaker than the S&P 500. Focusing on what I call the market leaders gives you an edge, as they'll often rise faster than the S&P and decline less when there are market corrections. This is the monthly chart looking at the QQQ and the relative performance analysis. So this red line here is a ratio of the QQQ price to the S&P 500 price. So you can see it was pretty much flat in 2005 to 2007 and then started to move higher. That indicated that at that point it was acting stronger than the S&P, and then we had a very strong breakout this is a monthly chart at the end of February 2009. Of course, the market made its low early the following month, and you can see with this chart it keeps rising. That tells you that you wanted to be in the QQQ or growth stocks, not the banks, which were the leaders in the prior bull market. This weekly chart of the QQQ is up through the middle of June and shows you in red, this is the RS line, throughout 2022 was declining. That meant that the QQQ was acting weaker than the S&P. That changed at the start of the year. The daily RS analysis turned first within the first week of 2023, and then you can see it moved above its weighted moving average here, confirming that the QQQ was a new market leader. It is still positive. It's a bit overextended here, but it's still the market leader as we head into the end of June. In today's video, I want to look at another method of finding the best performers when you know what average is leading the S&P 500. So here we have a chart of the QQQ. This is a daily chart up through the close on Friday, June 16th, and we have several plots of the rate of change. So ROC 5, 10, 20, and 34. For entering those into stock charts, you can just scroll down here and you can see rate of change 5, 10, 20, and 34. From this screen, we get values as of the end of last week, June 16th, to show you that the 5 period is 3.79, 10 period 3.74, 20 9.09, and 34 is 14.09. From this data, you can then put together a scan for all the stocks in the QQQ or the NASDAQ 100 to see which ones are acting stronger than the average. Using these rate of change values, you can enter them into a scan within stock charts. So you create a scan here. The group is obviously the NASDAQ 100, and you have the rate of change values I just reviewed: 3.979, 3.74, 9.09, and 14.07. So what this is going to do is going to select only those stocks which are performing better than the QQQ based on the rate of change values. So if we run this scan, we do not want to use intraday data. So you can say we're trading days before the market closed on the 20th. You can see that scan. So we're going to be looking at the closing data as of June 19th. And here you come up with just 6 stocks. Now earlier in the year, as the QQQ was just starting to lead the S&P 500, you had many more stocks that came up in the scan. Let's look at a few of these. First one on the list is Intel. You can see it's just sort of just moved above its yearly pivot here and is trying to form a bottom here. The RS is positive, though it pulled back sharply this week. So we really need to see a move above this point here to determine it is a new market leader. Second chart on the list was Facebook or Meta. You can see it also came up as a market leader earlier in the year, and the RS looks even stronger than it does on the QQQ as it made a series of new highs. Shows no signs yet of topping out. It is no surprise that NVIDIA is also on the list. You can see we just made a new high this last week and also showed a clear bottoming formation early part of the year. What I teach in my courses is to look at breakouts in the RS like this one here to identify new market leaders, and conversely, when you get a breakdown as we did in April of 2022, it means that drop faster than the S&P, so it's not a stock you want to be long. Palo Alto Network has also been a leader for the year, but not as clear a trend as we saw in NVIDIA. You can see we moved back above its moving average here, pulled back to it several times, both in March and in actually in April, and then in May. You can see these two pullbacks here, and before it resumed to the upside, it's been very strong so far in June. In fact, it's up 11.5% so far in June, clearly a market leader. Tesla was also on the list. You can see it had a nice surge at the start of the year, then declined, made a series of lower lows and lower highs here, 217, 207, and then formed a doji buy signal here at the end of April, and since then it's had a pretty good move to the upside. The RS is confirming that now, and pullbacks now to this support in here, should be a good new entry point. Workday, WDAY, is also identified as a market leader. Spent most of the year above its rising weighted moving average here. Little period in early May, it declined in here to approximating the lower Stark band on a weekly basis before it again turned higher. So it is on a weekly basis is still showing positive RS. Of course, I teach using both the weekly as well as the daily. The daily will typically turn positive first. You can see that we had a nice bottom formation Workday here in December, and then a positive signal here actually in December. It started to become a market leader. Now it's we're seeing a slight divergence here in the daily RS, lower highs here. So it seems to be losing some upside momentum because we just had a long weekend. Oftentimes you'll want to look a bit back further in time to the prior week. So that'd be 2 days before the close on the 20th. Take us back to the close of the 16th. You run the scan then, get quite a bit different picture. All of these stocks were as market leaders. So that forms the basis for doing further analysis. You can see whether these stocks are, up against their, resistance levels or support levels based on pivot or 20-period EMA, and set up a strategy to use this relative performance analysis based on the rate of change to help you find the best stocks or ETFs. I'm planning to do future educational videos, so as always, you can email me at tom@viperreport. Send me your suggestions. I hope you'll also take the time to read the Finding the Next Bull Market Leaders on Viper Report in more detail. I think you'll find it illuminating, as it's the key to success in up and down markets. If you'd like to learn more about the stock market, investing, and trading, you might want to take advantage of the special offer for traders and investors. There's a link to this page in the email description of the video. It's a special offer. Essentially, it's $199 for a 90-minute one-on-one session with me. And, the topics or what we'll discuss is really up to you. If you look at this, lots of really nice recommendations from my colleagues. And, it's pretty much a bargain. How it works is it's done through PayPal. So, if you pay through PayPal, my office will set up a time. We can talk about your experience in the markets, what you'd like to accomplish, or I can help design something for you that will, I think, probably open your eyes about things that you didn't really know or understand about the markets. Changed a lot of minds in the last couple months with the students I'm working with, and I think you'll find that's also the case. So take advantage of this, and also give me your feedback on future video sessions. Thank you.